Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world. We run it out of Silicon Valley, but with a global footprint, and our mission is to help 1 million entrepreneurs reach $1 million in revenue and beyond. And in support of that mission, we've been doing these free mentoring roundtables for years and years and years. We first started experimenting with them in the fall of 2008. So 8 years, 328 sessions today. So we've been here for week after week, religiously almost, for many years now. And many of you have been here with us through that time. And we've had a chance to work with so many of you, listening to your pitches, working with you in helping you strategize. Now, if you are live tweeting the show today, please use hashtag 1M1M. And on Twitter, we're at 1M by 1M and @Romana. So either of those are going to be good channels to follow. We publish a lot of very interesting, educational content and trend and current events in technology and entrepreneurship. The 1M1M Roundtables channel on YouTube is where all our prior recordings of the roundtables are available, and there's a myriad of other content that you can access. Another free and very good learning repository. These are the call-in numbers. I will put these up later when we are ready for you to call in. This is a roundtable, so we do want you to participate. However, we are not quite ready for you to participate yet. We do have some other programming before that, which is, firstly, we're going to speak with Stephanie Leffler, who's the CEO at OneSpace. Stephanie, welcome to the show.
Thanks. Thanks for having me.
You're very welcome. Let's start with your first entrepreneurial stint and the story of how you bootstrapped your company to $20 million in revenue. Walk us through that journey. How did you do it? What did you do? What's the secret?
Sure. So I started my first venture in college and wrote a business plan to sell products online. And I think you started to struggle with that process, mainly because building a website, this was in 2000, was not incredibly easy. There weren't a ton of tools out there at that time to do it, and so you had to hire a web developer to build a website for you that could take credit cards. And in struggling with that process, we at the very, very beginning, we went to a bank and got a line of credit, a small line of credit, and financed our inventory, and figured out that our products were seasonal. We're struggling with building the website, and as many entrepreneurs realized, I think it was a lot harder than we had anticipated when we started. But fortunately for us, we still had enough dollars in our line of credit that we were able to kind of think through where we wanted to be, and ended up doing a partnership deal with the owner of this called do-it-yourself e-commerce startup that we were using to help us make building our website easier. And we created a partnership with him where we sold these e-commerce systems. He provided the technical support for them, and we were able to slowly start to acquire clients. And in that time, we were charging $2,000 a piece for these online stores, but people were struggling to pay it. And so we started charging people by month instead, which, there really wasn't the concept of SaaS or software as a service back then. So it was more out of necessity, but that turned out to be a really good thing and helped us build a sustainable base of recurring revenue. We ended up kind of giving our e-commerce store to someone that we knew to run it and take care of it, because we saw that the real opportunity for us, I think, was in e-commerce software. And it really just started with, hey, let's try to sell one a day, and then once we achieved that, it was let's try to sell two a day. And I'd say the biggest piece related to bootstrapping is that we just were super, super cost conscious at every step of the way. You know, I worked on a table for a very long time. It was like a plastic outdoor table because we happened to have a friend that was giving it away. And just, you know, you don't think about those things, but spending even $300 on a desk is, you know, $250 that you don't have to spend on promoting yourself online or doing something else. So I think that super, super focus on keeping costs low is mission critical if you're trying to bootstrap something.
And during those days, for the time that you're describing, Google AdWords was quite new. Was that something that you were taking advantage of?
Well, in that time, Google AdWords, you're right, it was quite new. It was actually just before, when we were really working hard to get traffic, it was before that, and Yahoo's directory was the way that most sites got traffic at that time. So we had sunprotected.com was our first domain name in our e-commerce store world, and we ended up registering one-sunprotectiveclothing.com so we could be at the top of Yahoo, and we had one-ecommercesoftware.com, which was our Yahoo URL for the Monster Commerce business. So it's, I think everyone is all very lucky that things have changed, and we now have clearly a much more robust set of tools that you can target online. But Google AdWords ultimately became an enormous part of our strategy, and it's such a powerful tool to any entrepreneur getting started.
So how long did it take you to get to your first $1 million in revenue with that pivot?
It took us, was probably 2 years from that pivot, between 18 months and 2 years to get to our first $1 million in revenue. You know, I think that the key takeaway was, yeah, it was pretty good. I mean, we were fortunate. It was a time where people were kind of trying to get online in droves. You know, it was the dawn of e-commerce, and you know, back then there were still people who would tell you, oh, that internet thing isn't going to catch on, which is, you know, really funny to think about now, but it was that early in the game. But clearly many people saw that vision and needed something, you know, to be able to help them get there. So we were lucky. We had customers coming to us, you know, from the very beginning. But, you know, as other entrepreneurs are listening to this, I think the most important takeaway from that part of the story is to really think about your core business model, and is there a sustainable element? Do you have to make a sale every single time, or do you have something in your business model that allows you to reap the benefits of clients that you've sold for a long time to come? And there's lots of ways to do that. It doesn't have to be a monthly charge for your product, but I think that's the piece that was such a lesson.
And what, so 2 years to 1 million, you went all the way to 20 million with that company. Talk a little bit about some of the highlights of the follow-on, you know, 1 million to 20 million journey. What's worth discussing in that phase? I'm sure a lot, but pick something.
Yeah, absolutely. I think, you know, there clearly a ton goes into that, but I think for us, the key was, you know, continuing to do the same things. We focused a lot on trying to communicate well with our team. You know, when you go from being really small to even to 20 employees, there's a lot that changes about communication. You go from everybody knowing every single detail about everything that's happening to really having to think about how to communicate well and make sure that your team is all aligned, and you actually have to put effort into that. So I'd say that was one big piece of the pie. The other one was making sure that for us, the customers that had come in and joined us because we were small and we could give them lots of individualized attention, stayed with us even as we grew. So we just started to think about, who do we want to be as a company? What do we want our customers to say about us? And then being religiously focused on those things. So for us, it was amazing customer service, making sure that no matter how large we got, we still had somebody that answered the phone on the first or second ring, and we didn't go to an automated, tech support system. There are a few little things like that that I think really stuck with our customers, and they felt like we were the same company from the time that we were small, and they knew, Ryan, who is the co-founder, and myself, to the point that they were dealing with lots of different people. But it's a journey that we could talk about for days, because there are parts that are amazing about it, and there are parts that are just, really, really hard. And I think any entrepreneur who's done that, whether it's going from 0 to 1 million or 1 to 20, probably has a treasure chest of war stories that they could tell. Can you still hear me?
Hi, Stephanie. Oh,
Yes,
this has
hi.
never happened before. I think Sumedha might have dropped. Are you there, Sumedha? I think that may be what happened. So
Okay.
let's wait a moment and for her to call back in.
No problem.
Yeah, she's the host, so.
Okay, no problem.
Sorry about this.
That's all right.
Very odd.
That's a pretty good track record if you've done this more than 300 times and it's never happened.
Right, and pretty surprising. Oh, yeah, she got booted out. Let me see. She'll be rejoining. Sorry, folks. I guess this is probably a WebEx problem.
Maybe, no problem at all.
It looks like Sumedha has dropped out of the room, so one more minute. Let me see where she might be.
Yeah, no problem at all.
Maureen, can you hear me?
Oh, I can hear you. This is Steph.
Steph, just a second. I got kicked out of the event and had a really difficult time dialing in. Can you hear Maureen at all?
I heard her a few moments ago, but I don't hear her right now.
I'm here. We hear you.
Okay, Maureen, I can't seem to get back into the event, so let's just, instead, in the interest of trying not to disrupt things further, let's just continue with me driving this on the phone, and then, as soon as I finish with Stephanie, I'm going to put Stephanie on the camera, and I'll just do it by audio, and then as soon as I finish, I can try to reconfigure the event and see if I can get back in, okay?
Okay. Sorry about that, everyone. Okay, I'll go on mute. Okay, Stephanie, thanks for your patience.
From time to time, in all these years, we have faced certain technical disruptions, but we have to recover from them. So, Stephanie, you were talking about how you went from the 1 million to 20 million phase, and the last question I had on that part of the journey was you exited the company. So please talk to us a little bit about what did you do by way of exit, and how did that come about?
Sure. So actually, about a year before we sold the company, we had the first time someone was interested, happened to be eBay, and I really didn't have any experience in acquisitions or how that went, and so I went out there, met with them, had lots of conversations, and they ended up choosing a different company to acquire at that time. But in hindsight, I'm really thankful to have that experience. It was really powerful as sort of the next time that occurred, being able to go and look back. And I do think, sometimes when entrepreneurs get interests like that, it's really disappointing when it doesn't work out. But, I think the takeaway is that it's something that if that happens once, you should really try not to be disappointed by that. It's high level of validation for what it is that you're doing. And so I think there's a lot of value there that starts to take it from that perspective. The second time that an acquisition opportunity came up, it's actually somewhat of a funny story. I was on vacation, and one of my team members called in to find out how things were going, and one of our salespeople answered the phone, and she said, "Oh, everything's going well. By the way, this company called Network Solutions called, and they, I talked to them for a long time, and they asked if you and Ryan would ever be interested in selling the company, and I told them absolutely not under any circumstances." Oh. And so I said, "Okay, great. Could you please give me their phone number and send it over?" So fortunately, I ended up calling them back and started a conversation, and that time it did work out. I think the most interesting parts of that were, I made a few mistakes, but in hindsight, I wish I would have managed differently. Having never really gotten that deep in a conversation before, within a couple of weeks, the acquirers were talking to us about what sort of price we might want for the company and how we were thinking about things. And at that point, we hadn't hired a banker or a lawyer. And so, I was speaking to them off the cuff, knowing really nothing about anything. And, I told them a few things that seemed like extremely high numbers to me. And, they didn't really bat an eye. We, very quickly after those conversations, did hire a lawyer and a banker. And, after talking with them, I realized that that's probably not the right move. If somebody is interested and starts talking about those things, if you don't have experience, the first thing that you should do is to stop the conversation and make sure that you have at least a banker at that stage who knows the space, who understands what kind of value you should be able to command and can more appropriately manage those conversations so that you don't tip your hat. I think we had a great outcome. I am not complaining, but in hindsight, I wish I could have had their counsel through the entire process, as opposed to, after we had gotten, to that phase where they were really expressing interest and asking me a lot of questions.
So you did all this from St. Louis.
Yes.
How is the entrepreneurial community there? Was there any support? Was there any activity? Did you feel alone? What's the dynamic like?
So at that time, there really wasn't, there were not a lot of resources for entrepreneurs in St. Louis. And I would say, in hindsight, I did feel, I would say alone is a good term for it. But, the truth is, I didn't even know that there were resources or support systems in other places. So I didn't spend any time thinking about that fact or dwelling on it, because I didn't even realize there was an alternative. Today, it's a much different climate in St. Louis. There's a thriving entrepreneurial community. There is a lot of support. We're fortunate to have MIT focused on the St. Louis community. We've got a Cortex Center for Innovation. We have places like T-Rex, which is a great facility in downtown St. Louis for startups, and a ton of mentoring available. We also have the Arch Grants program, as well as Pipeline for Entrepreneurs, which is a mentoring program for entrepreneurs. So I feel like today, as a community, we do a much better job supporting entrepreneurs on their journey. And we have funding options available now. We have Cultivation Capital and Lewis and Clark. Cultivation at generally the seed and A round stage. Lewis and Clark, who can take companies from A to even B round and beyond. So I feel really happy that St. Louis has upped their game when it comes to supporting entrepreneurs.
So meanwhile, you have started a second venture called OneSpace, and you've bootstrapped again. Tell us a bit more about what you do and the story of getting this second venture off the ground.
Well, after selling Monster Commerce, I stayed there with my partner for 18 months. It was actually a very valuable period of time in my life and in my career, because I had never actually gotten to see a CEO in action and understand what other companies looked like and how they ran. And so I learned a lot in those first 18 months. And, lots of entrepreneurs had told me, like, hey, it's going to be horrible. And I thought that there were parts of it where I felt like I wasn't in control any longer, which clearly I didn't like. But there were parts where I felt like I was really getting a very valuable education. But after about 18 months, there wasn't a lot of new learning I didn't feel like I was learning a lot anymore. So that was when I decided to move on. My partner and I decided to take a year off and drive across the country in our RV with our dogs, and we didn't last very long. I always tell people we stopped, it's true, 6 weeks in South Dakota. We bought whiteboards and started to write problems that we wanted to solve up on a board, and I knew that was going to be the beginning of the end. And it was only a couple weeks later that we turned around and headed back to St. Louis and rented office space. And we started to build a website. It was just the two of us. We hired one developer, so we wanted to stay really small and kind of experiment. We started to build a website to try to better organize the information that was available in Wikipedia. And it was really interesting to me. I loved what we were doing, but as we continued to build, we grew our team. We were funding everything ourselves. We had about 25 team members, and unfortunately, the ad-supported model that we had planned to use as our primary business model wasn't performing the way we had expected it to, and we hit a point where we really had to make some decisions about whether we wanted to invest heavily in the business and try to take it into basically get brand recognition with consumers, which I think is very tough, or if we wanted to go a different direction. About the same time, we had used freelancers to really do the majority of the work on this website and collect data for us at massive scale, and we built software to make it easier for us to manage them and to integrate with them. Essentially, how do we find them? How do we figure out who's good, who's not good and incent them to do more work, keep them engaged. But our software platform that we built to do this was really powerful, and we started to let a few other companies use it, and that was how OneSpace really got started. And in that moment where we were making that decision, we took a look at all the assets that we had and said, you know, while this might not be working, this software that we've built is really powerful, and maybe we should, you know, do some testing and see if we can actually sell it. You know, we knew that people liked it who we were allowing to use it for free, but we tested in the waters and were able to sell it to a few clients, and that was kind of the beginning of what ultimately became OneSpace. Amazon became a partner, and we started to grow the business from there.
And how far did you take it in the bootstrap mode before you raised money? Because in this round, you did raise money with this company. So talk to us a bit about what was the logic of how far did you take it without outside capital, and why?
Sure. So we took it from a revenue standpoint. We had maybe $350,000, $400,000 in revenue when we raised our A round. I would say there wasn't, it's you know, to sound terrible, there wasn't a lot of logic behind that particular point for raising money. But what happened was we got a phone call from someone at Sequoia, and you know, it's funny, in the we were running Monster Commerce, I got phone calls from investors all the time, and the truth is, I didn't really understand the venture capital world or what sorts of advantages there were to working with investors, and I almost always just said, hey, no, thank you, and didn't really spend any time considering it. And that's what I did when this gentleman from Sequoia called, and he said, you know, I really think you're making a mistake. I think it's something you should consider. And I said, well, I really don't understand what the advantages would be of having a venture capitalist work with us. And so, you know, I told him, no, thank you. And he called back the next day and said, you know, this is really bothering me. I really think you should understand what what this is all about. I just don't think that you've been educated. And I said, okay, I'm certainly interested in listening. So he walked me through what venture capital is, how it works, why companies, you know, might want to raise money. And so it was interesting enough that we decided at that point to at least hear him out. And I guess the way Silicon Valley works is that, you know, within a week of talking with him, we had another 5 or 6 firms calling us, and I decided to hire a lawyer. Once again, I always feel like in these situations, lawyers are really good advisors because they don't have a dog in the fight. You know, bankers take a percentage in these deals. Lawyers get an hourly rate, so I feel like you can really kind of trust their advice. But we hired a lawyer, got some advice there, and then went out and actually met with all these firms and ultimately decided we could make better decisions for the business if we raised money and we weren't writing checks out of our own personal checkbook. So that was why we ultimately decided to raise money. Plus, in that process, we met Corey Malloy at Highland, who still sits on our board, who we really connected with. And I think that was kind of the criteria going in is, hey, this seems like it might be a good idea. If we find the right partner, this is something we'll do. And so that's where we ended up.
And whom did you end up raising money from, and how did your location play into that A discussion and B decision?
So we raised in our A round from Highland. We also raised from a few people locally in St. Louis, but just small amounts in the round. Highland was the vast majority of our A round. You know, like I said, we did meet with a number of firms. All of those firms were in Silicon Valley at the time. There weren't any firms in St. Louis that could make an investment at the, you know, that were in our space that could make an investment the size that they would need to be in our A round. And I think location did play some degree of a part in our raise. I think it's kind of a polarizing thing. You know, on one hand, a few VCs said, hey, I'm not ready to take on a portfolio company in St. Louis, but a few also said, hey, there's nothing we'd rather have than a portfolio company in St. Louis just because of the cost structure and the availability of talent. There are a lot of advantages to building specifically a tech company in the Midwest, in that, you don't have to compete for talent the way that you have to on the coast. And from a cost standpoint, there's really no comparison. So I think ultimately, yeah, go ahead.
Did you get any term sheets from Silicon Valley?
Yes, the firm, so Highland, while their headquarters is in Boston, the team that invested in us was from
okay, so it was not the Boston team.
Right.
But that was it? There was no other Silicon Valley firm that wanted to invest in St. Louis?
No, we did have multiple term sheets.
Multiple term sheets, okay, great.
Through that process, but ultimately chose Highland.
Yeah. So, for the benefit of everybody who's listening, there is, once you get to a certain amount of validation and you can show that you can scale at a certain pace and so forth, some Silicon Valley investors, not all and not broadly, I would say, but there are some Silicon Valley investors who are investing in other places. So the trend is there, and I've seen several such deals, so to speak. But like you said, Stephanie, you had a good 350,000, 400,000 in revenue. You had a certain run rate that you were able to show, and there was validation already in this in your business. That is pretty much a requirement. If you're trying to tap into Silicon Valley capital from elsewhere, you're going to need to come here with a validated business, not just a validated idea, a validated business that is already flowing in terms of revenue. So that's just a takeaway that you may want to file away. Now, Stephanie, you are in the midst of a complex pricing model switch. Talk to us about your current pricing model and what you're trying to switch to, and talk to us about the challenges.
Sure. So in the OneSpace business, when we started, we weren't ready to roll out our software into the hands of customers yet. We wanted to spend more time testing more types of work running through the platform and really customize it so that the user experience was what it needed to be. So what we did is we sold our platform essentially in the form of managed services. So an example, if a company wanted us to execute some work for them, maybe there's let's call it a big social media company who wants someone to look at all the ads that are about to go live and rate the ads on a lot of criteria. We have a large freelance workforce who could do that. Our software platform manages it, but we weren't ready to let that company, point and click in our software, launch that work themselves. So we would do that for them, and we would charge them, we'd tell them, hey, to work with us, you need to sign an annual contract. In our world, it would need to be at least a couple of $100,000 for us to take on a new client, and we would actually be behind the scenes managing all of that work through the software and hand our client a finished product, so to speak. So while that worked well, there's a couple of big issues with it. One is that you get a lot of revenue concentration with certain clients, and two, you do have to continuously make a sale, which is something we talked about a little bit earlier, where you don't have to do that when you have a true recurring revenue product. Now, we tried to fulfill business processes for customers that were recurring in nature to mimic it, but at the end of the day, if you have to get another contract when project A is over, you don't have that sustainability that we were looking for. So this summer, we finally got to the point that our software was ready to put into the hands of customers, and we launched a software as a service product where customers can buy a monthly or an annual license and can actually push work through the platform itself. So it is a complicated change because we have a set of customers who are used to working with us in a managed service setting, paying these sort of large amounts on annual contracts, and now we're moving over to a self-service offering where they're managing it themselves and paying a monthly or annual fee to do so. So it's been, I'd say for our customers, it's been a reasonably smooth transition. I think the hardest part for us is all of the internal processes that we had to adjust in order to accommodate it. So particularly on the sales front, when you have a sales team that's functioning well in a certain model, kind of forcing them to completely shift gears is harder than I thought it was going to be. And we're getting there now, but it took us a little bit longer than I wanted it to for us to be well-versed in the new platform and I guess being responsive to the changes in sales cycle that occur in the new model.
Last question. You have been very successful as a woman entrepreneur in tech. As you, I'm sure, read in the media, there is a lot of chit-chat about there being bias against women in the industry. How do you feel about the coverage? How do you feel about the phenomenon? What has been your experience?
My experience has not been in line with the coverage that I think we've seen in the media, particularly in the last year or so. I really haven't felt any disadvantage due to gender. In fact, if anything, I think it's been a slight advantage just because, in business, anything that makes you stand out or that makes you appear different from the crowd, I think is a good thing. And so, for me, showing up at a conference where, for CEOs, where there's, 100 men and a handful of women, I think is a good thing just because it jumps out at people that, hey, there are a lot of men here and only a few women. So it's, I'll take that all day. I think the one aspect that's interesting for me to think about, specifically as it relates to women in technology, is specifically within the development community. I think we do still have a shortage of women in that sector in particular, and I think I'm not exactly sure what led to that. I feel like there are a lot of organizations out there trying to put engineering and development and problem solving in front of younger girls so that they know that that's an option for them. But I think having a female communicator on a development team, even if it's 10 men and 1 woman, I think it changes the communication dynamic, and that's a really good thing. I've seen it do wonders for more than one development team over the year to introduce a female onto what was an all-male team. So I think that's one thing that, I would say I don't feel like there's any discrimination there. I think it's just more a matter of exposure, and I think it's important that we continue to expose young girls to the technology field and make sure that, they're thinking about those things as options. But overall, I haven't felt any bias or negativity. Certainly, I've had some bad ideas, and I've had people tell me that my ideas are bad, but I don't think it had anything to do with being a female or a male. I think along the way, you just, sometimes you have bad ideas. Now, not minimizing what other women have said about their experiences, I don't have any reason to say that they are not telling the truth. I'm sure that some of that does go on out there, but for me, I haven't personally experienced it.
My experience is more in tune with yours. I've not faced discrimination. That doesn't mean that, there aren't, different behaviors that men have towards women, of course. It's a different gender.
Sure.
So in a male-dominated field, there will be, some level of getting used to women in positions of power and strength that they're not necessarily used to on a daily basis as much. So you have to learn to deal with that. But I am actually not very happy with the style of coverage of the media on this issue. And there is this tendency of, like a venture capitalist rejects the business plan from a woman entrepreneur, that must be discrimination, kind of leaping to conclusions, which I find obnoxious and not helpful, because when I look at the business, often if I were in the VC's position, I would reject it too. So this is kind of really unhealthy reporting, and it's very unfortunate that people are kind of hiding behind gender when they seem to not be able to take rejections from investors. The truth is 99% of the businesses that seek financing get rejected, men or women. That's a, gender neutral statistics. So yes, of course there's going to be a lot of rejections. There's nothing to do with gender.
I couldn't agree more. I really think that from an investor standpoint, they are looking for one thing, which is a business that has the makings of something great that can scale, that can return dollars to, to their investors and the people who put their trust in them. So I struggle to believe that that would factor in any way, shape, or form. I think in this day and age, it's more, it's up to each individual person to convince the person that they're talking to that they've got a good idea and that they have something. And in this world, it's tough to go, and entrepreneurs put their hearts into their plans and what they're trying to do and what they've done. And it's really difficult to face the criticism that you do whenever you go to seek funding. I mean, I've found that to be a very difficult process, but by its nature, you are asking somebody to critique you and to do so, on a pretty deep level. So you have to be ready for that, and it's not always going to go well regardless. I mean, there are countless stories out there of companies that are crushing it now that had many, many rejections. So I personally don't believe that those rejections are coming because of gender like you.
And also, it's not a, venture rejection is also not a value judgment on the quality of your business. It's just a value judgment on that your business is not fit for the venture capital model. It's not going to probably scale from 0 to $100 million in 5 years, and it's not going to be that large a company that quickly. And that doesn't necessarily mean that you don't have an interesting business, a high-value business, and a business that creates a lot of value for customers and for yourself, for your employees, and so forth. So, there's a lot of misconception, and this whole gender bias thing, I think, is creating a layer of misreporting and misrepresentation of the issue that really irritates the hell out of me.
Well, I can understand that, and it's interesting to hear you say that, because I do, and I think I even fell into that trap a little bit as I was talking with venture capitalists about our company. You hear the things that venture capitalists are looking for, and when you hear those things enough, I think you do get beat into this sort of this mindset of that equals good business, and you're right, that doesn't always equal good business. And as evidenced with what we did with Monster Commerce, we did not need a venture capital firm to help us grow a company quickly and have a successful exit. There are many companies that I would say venture capitalists would absolutely not invest in, but I absolutely would, because they have a unique angle or something really smart that they're doing, or margins that are to die for. I mean, there's a million reasons, but I do think that's actually a really good message to take to entrepreneurs, that they can't take that critique as a critique of their business as a whole. It is just, does it tie to a particular investment model?
Stephanie, thank you very much for coming. This was very inspiring, and I'm sure it will get a lot of listenership, and I will definitely make sure that we promote your interview extensively, because you have a great story, B, the right mindset as far as this women in entrepreneurship issue is concerned, and God knows it's very required in this misreporting world. So thank you very, very much, and good luck.
Thank you for having me. It's been great getting to meet you, and I look forward to talking to you again soon.
Likewise. Stay in touch.
Sure.
Okay, folks, we are going to do a bit of the entrepreneur mentoring next, and I just want to set some expectations for you guys. Those of you who are going to be presenting or dialing in to discuss your businesses today, just know that this is a working session, okay? This is not, we don't have any agenda other than working on your business. So you don't need to be defensive. You don't need to feel like, you know, we are here to attack you or anything. It's just a safe place where you can bring your issues and we'll try to help, and that's about it. So the one thing that is a refrain from what we just talked about, not all businesses can raise money, not all businesses should raise money, and raising money does not guarantee success. You know, 9 out of 10 venture-funded startups fail, so success in entrepreneurship doesn't necessarily mean funding. Some businesses will be fundable, other businesses will succeed without funding, and some businesses need a lot of, you know, pivoting and changing course and so forth. You heard in Stephanie's story today that she had to pivot in both her businesses. Actually, she's had to pivot, you know, some distance along. So you're gonna, you know, need to take all of those nuances in stride and figure out a strategy that makes it all come together eventually. It's like a jigsaw puzzle that, you know, gradually comes and falls into place. And eventually you do find inflection points that help you grow. So that's really what this is all about. It's, as I said, it's a working session. And if you're not pitching today, please do participate by asking questions in the public chat. Be sure to set your chat to send to all participants, not to me and not to Maureen or, you know, the host. You basically need to share your questions with everybody. Sumedha from Pune, Maharashtra is the first presenter. Sumedha, are you on the line?
Yeah, yes. Yes, I'm online.
Okay. So go ahead and start your presentation and let me know when you want me to advance the slides.
Okay, fine. Actually, I don't have these slides in front of me. So I just wanted to pitch about the whole idea I had. And also, I just wanted to clarify that right now I'm in the design stage of my project. It's not something which has been implemented. I'm going to implement it in December of this year.
Mm-hmm.
Okay, so currently I'm designing a project for book sharing. So one problem that people have is that and my target audience is anybody above the age of 12. So when you're a reader, you have this habit of collecting a lot of books, and you have a whole cupboard piled up with books, and they just lie around with, and mostly you hardly read the book again. And the second thing is, when you really want to read a book, you have to either place an online order and you have to wait for a few days, or you have to drive to the bookstore and get the book. And in these two methods, you will have to pay a lot of amount for a one-time read. And if you want to borrow a book from one of your friends, it is another problem, because your friends might be really skeptical on how long you will take to return the book, and in what condition you may return it. So I aim to develop a platform which connects these lenders to these borrowers. So when you place an order in our site, you get to enjoy a read with a treat, with a treat like a cupcake or a muffin, and you get to return it in whatever time period you want. And with this, you get to read the book in a very less amount as compared to that of an online order or buying it in a bookstore.
And is there some sort of a fee to be part of this network?
Sorry? No, you need not. No. You will have to just log into the network. you have to just log in and sign up, and we're trying to keep it as an easy sign up, like with a Facebook sign up or a Google sign up, so that people can log in.
How does the business make money?
Okay, so when you borrow the book, you will have to pay a certain amount, and then you will get to read the book. And then after you're done with it, we deduct the amount per day.
So there is a fee to borrow the book, and you take a commission of that fee. That is your business model.
Yeah, and the lenders get to make money by, we give a part of the fees, but part of the money that we make to the lenders, so that they get to make money for the books that they've piled up.
Right, so it's basically a marketplace of used books, and you take a commission of the transaction. That's your model, okay.
Yeah.
And
yeah.
And what validation do you have that people want to do this? Is there any kind of validation work that you've done so far in the process of designing this?
Yeah, I have actually done a very small setup of the same thing. I've actually done it with few of my friends in the neighborhood where I live. So that's one thing that I've done. And I've also tried to find out if more people like it, and not just the people whom I know. With the help of some forms and all, I've tried to find out if people are actually interested in such a model where they can make money of the books they have and read new books for a very less cost.
So for consumer market validation, 3 is clearly not a statistically significant number. You're going to need to get to a higher number in terms of, validating. So you do need a validation strategy for figuring out whether this is going to be viable and scalable, etc.
Okay.
And the second point I would like to make is that, you kind of want to target this to a certain age bracket probably, because age bracket, psychographic type of audience, such that you can acquire those customers in some reasonable way. So who, in the entire universe of readers, who are the ones who may be willing to do something like this? And for instance, you make certain comments, certain statements in your first slide here that people don't really want to go to the bookstore. I love going to the bookstore. I love going to the bookstore and searching. Here where I live, there's a wonderful cafe, and there's a bookstore right next to it. So very often on Saturday mornings, my husband and I, we go have a breakfast at the cafe, and then we go spend an hour or 2 at the bookstore. So
no, it's not the. Can I interrupt you?
Of course you can.
Hello. Yeah.
Yes.
It's not about going to the bookstore, because even I love going to the bookstore, and that's why I have so many books piled up. So it's just that sometimes but because you'll have to drive. Most people don't get to go to the bookstore so often, because you'll have to go there, drive, and park your car, and then find the books that you want and search for them. So instead of all this hassle, you can just log in and find the book that you want and get it within a couple of hours.
And who is taking care of that delivery?
Yeah, delivery, initially I have a few of my friends, we are doing this together, and you can go and pick up the book from the lender's place and deliver it to the borrower.
So your marketplace will have to have a delivery network.
Yeah,
right,
I'm not
so
outsourcing the delivery thing right now.
that assumption is a very problematic assumption, because you need to then model it financially to see at what price point does it even become viable, because you're going to have to fund. If you're going to offer this delivery to all your buyers and sellers, then you're going to need to be able to create that delivery network, fund that delivery network, and be able to, the business needs to be viable, including that delivery piece. So, so it seems to me that, in marketplace business models, people love marketplace business models because there's basically the buyer and seller do what they do. The delivery is not the responsibility of the marketplace. Now, you are coming into this model and saying that the delivery is the responsibility of the marketplace. And that makes things, one, much more cumbersome, and two, much more expensive to build this. And that building delivery networks is an expensive affair, and it's a complex affair. That may be a good value proposition to put in, but it will also drive your cost structure. You will not be able to now rent books at the kind of price point that you want to, because that delivery costs have to be covered. So I'd like you to model this from a financial point of view to see at what price point, under what financial assumptions does this become viable as a business.
Okay. So for that, I initially thought of starting this in right now I'm just doing this in my colony, so I thought of starting this in the city that I live in, like in maybe Aund or something, which is a small neighborhood which is bigger than what I'm currently doing, but yeah, so that I can just test on the delivery service.
Well, you don't even need to start something to test it. You need to find the assumptions. You need to do a financial model, and if you don't know how to do that, this is something you're going to need to learn, because, it kind of needs to make sense in theory. Otherwise, there's no point starting this business. You can't lose money and call it a business. So you need to find out what is it going to cost you to do this kind of a delivery network, and the price points at which people are willing to, rent books from a network like this. Is this viable? Is it reasonable? Okay. So that's my key feedback. Maureen is telling you in the public chat that she just donated tons of children's books, and that may be a good category because they're of interest only for a few years. And that's a very valid point, is that, if a family has a lot of children and the children accumulate a lot of books, creating some way of, circulating those books through a network like this without piling up on buying all of these books, that may be a reasonable, segment to go after.
Okay.
And then you could do this as kind of like a mom's network, where, or mom and children's network, where basically, or mom, dad, children, they kind of circulate in this network and exchange books and so forth. Maybe that's the positioning of your storyline. So I would say there are a couple of things to take away from this. One is to segment this better and find a segment where you can get real traction. And secondly, figure out the financial model such that, there is a
the price
validation on viability. Yeah, exactly.
Okay.
And then you need to get to a more statistically significant number of users in the segment that you choose. You need to go kind of figure out how, what kind of interest level there is. So, yes, you have a lot of challenges. I have your challenges slide up right now. Customer acquisition is a challenge. Hiring delivery people and making that viable is a challenge. But that's what business is all about. That doesn't worry me. But you're just going to have to tackle one by one each of these. The other question you have here is, should I take a security deposit? Yeah, it may be a good idea to take a security deposit. All libraries, I believe, take a security deposit, so, or at least used to. I don't know if they still do, but a security deposit may be a good way to deal with, you know, people not returning and theft and stuff like that. So those are my feedback. And Maureen is giving you another suggestion, is to create some sort of a centrally located pickup point rather than delivery.
Okay. So I am actually not on the chat, the webinar. I'm on Skype, so I won't be able to read all that. I'll just log in after this call, so I can read all that.
Yeah, you will get a recording. You can look at that. So if you do the centrally located pickup point rather than delivery, there are certain advantages to that. You could have, you know, a whole stack of books brought in for being kind of rented out or for in this network, and then you need staff in the delivery point to be able to manage that like a library, right? You're essentially running a library in that point, at that point. But that there are ways to manage the operations of that. The other suggestion Maureen is making in public chat is to partner with a kids store, maybe, where if there's a neighborhood kids store where there is already foot traffic, you could create some sort of a partnership with them to manage the logistics through that. But it's not so simple if you're going to have all the inventory stacking up, you know, in that delivery point. So there's there are some details of operational logistics to be figured out. So your point that you want to do some sort of pilot is very well taken. You will eventually, to iron out and flesh out all these details, you're going to need to pilot it. But I'd like you to conceptually pilot it first and design something that is financially sound and logistically sound before you start on a physical pilot. That's my point.
Okay, sure. Okay? Yeah, I got it.
So Sumedha, you will
Thank
have
you,
have
Samana, for helping me.
You can play it back and make notes.
Yeah.
Okay?
Okay. And I'm really glad that you are helping me out, because I never expected for my slides to get accepted for your help and all. I just sent them out. And I'm glad to get your input, and I'll be working on this soon.
Okay, great. Good luck.
Thank you.
All right. I'm going to give you some pointers to resources that will help you further in your entrepreneurial journey. First and foremost, there's a course on lynda.com. It's also on LinkedIn Learning. That's my course on bootstrapping. That's about a 1-hour course. It's excellent, and you'll learn a lot if you're a very early stage entrepreneur, first-time entrepreneur. If you like what we're doing here, please refer serious entrepreneurs into 1M1M. We're looking for serious entrepreneurs, not just kind of people who have, you know, impractical ideas about what entrepreneurship is all about, but people who know that it will take you many years to build a successful venture. Now, as far as 1M1M resources, everything is at 1mby1m.com. You'll find a very rich blog on the website for free. You'll find the Entrepreneur Journeys book series. All the books, all 12 books, are available on Amazon Kindle, and each of them cover a different topic. These are case study-based books, a good learning starting point as well. And on the website, there's a ton of material, lots of videos, video FAQs, descriptions about the program. These roundtables happen every week. They're free. You need to just go to the website and sign up to present and to discuss your business. The premium program is extensive. We offer you full methodology guidance, a full curriculum. business development, strategy consulting. We help you with financing, we help you with media relations, etc. And that's a $1,000 annual membership fee. The $1 Million Club is a set of case studies of success stories. Quantifying the 1M1M value equation is an ROI analysis of the program. You can look at that on the website as well. We request you to take the 1M1M self-assessment because you are an investor in your own venture. There are tons of questions that investors would ask you if you go out to seek funding, but these are questions you should ask yourselves. Before you sign off, 2, 3, 4, 5, 7 years of your life on a venture, you should ask these questions of yourselves so that you know what you're getting into. If you have difficulty answering these questions and you need methodology guidance right away, please feel free to also sign up for 1M1M Basic, which is our curriculum-only option. That's just $99 a month, and you will get feedback from that as well. So those are, pointers. There's tons of material on the website for you to understand the program. The curriculum is based on over 750 successful entrepreneurs and their journeys and case studies. So you get to stand on the shoulders of lots of entrepreneurs who have come before you, and those are the case studies through which you can avoid making avoidable mistakes, essentially. There are a lot of mistakes a lot of people have made already, and just by learning from other people's journeys, you get to avoid those mistakes, and that's very helpful in, it's a steep learning curve, and this is how we mitigate your ability to, climb that learning curve fast. Our methodology is lean, capital-efficient, bootstrap startups, and that's a requirement because, as I said, funding is very difficult for concepts, and concept stage ventures, you're going to need to do some validation and in a bootstrap mode before you will be fundable. And then we also help you through our network to get coverage. That's pretty much it. I can take questions. There are 5 more roundtables this year. So 2 more in November, 3 more in December. And you're most welcome to sign up for any of those to come and discuss your businesses and strategize. If you have any questions, you can now ask in public chat. Be sure to set your public chat to send to all participants, or the call-in number is on your screen. You're also welcome to call in. So either way, now is a good time to ask further questions. And while you're thinking about your questions, let me introduce you to Irina Patterson. If you have questions about the 1M1M program, you can contact Irina, and she'll be happy to answer any of your questions. That's pretty much it. Anybody? Questions, comments, introductions? If you would like to introduce yourselves and tell us what you're working on, what kind of business, what kind of project, what kind of roadblocks you're facing, this is a very good time to discuss any of that. Maureen is offering a question that's popular on Quora. Is it possible to build a billion-dollar company without funding from a VC? And the answer is yes. 2 examples, Zoho and eClinicalWorks. If they went public today, each would be worth over $3 billion in market cap. They have, as of last year, they did more than $300 million in profitable revenue. Both are 100% bootstrapped. There is not an ounce of venture financing in either of those companies. Both case studies are in my $1 Billion Unicorns Entrepreneur Journeys book. That's the last in the Entrepreneur Journeys series. You can look it up online on Amazon and read that book, read the section on bootstrapped unicorns, and you would learn a lot about how they have navigated their journey and what works. Anybody else? Any other questions, comments? I see a lot of people in the room. Where are you dialing from? What are you working on? We would love to know you. No? Too shy? You want to call in? All right, folks. If there are no further questions, we're going to wrap up for today and reconvene here next week and look at other businesses and continue the conversation. Thank you for coming, and good luck with each of your projects. Thank you very much, folks. Bye-bye.